Hey there, you're walking down the street, and suddenly, a small, unassuming bank catches your eye. It doesn't look like your typical financial institution, with its sleek, modern design and friendly staff. This is Relay Bank, a new breed of bank that's challenging the traditional banking industry. But how does a bank like this make money? Let's dive in and find out. Building context. Before we get into the nitty-gritty of Relay Bank's revenue streams, let's take a step back and understand what makes it different from traditional banks. Relay Bank is a digital bank, meaning it operates primarily online. This allows it to cut costs associated with physical branches, ATMs, and overhead expenses. But how does this translate into profit? Revenue Stream 1: Interest Income. One of the primary ways Relay Bank makes money is through interest income. Just like traditional banks, Relay Bank offers savings and checking accounts. When you deposit money into these accounts, the bank uses it to lend to other customers or invest in various financial instruments. The interest earned on these loans and investments is the bank's profit. Relay Bank may also offer higher interest rates on savings accounts compared to traditional banks. This is because it has lower operating costs, allowing it to pass on more of the interest to its customers. However, it's important to note that interest rates can fluctuate based on market conditions. Revenue Stream 2: Fees and Charges. While Relay Bank aims to be a fee-friendly bank, it still generates revenue through certain fees and charges. These may include overdraft fees. If you spend more money than you have in your checking account, the bank may charge an overdraft fee. Foreign transaction fees. If you use your Relay Bank card for transactions in a foreign currency, you may be subject to a foreign transaction fee. Monthly maintenance fees. Some accounts may have a monthly maintenance fee if a minimum balance is not maintained. It's important to review the terms and conditions of your Relay Bank account to understand the specific fees and charges that apply. Revenue Stream 3: Investment Income. Relay Bank may also generate income through investments. This can include investing in stocks, bonds, and other financial instruments. The returns on these investments contribute to the bank's overall profitability. Revenue Stream 4: Partnerships and Collaborations. Relay Bank may partner with other companies to offer additional products and services to its customers. For example, it might collaborate with a fintech company to provide personal finance tools or a travel company to offer travel rewards. These partnerships can generate revenue through fees or commission-based arrangements. The future of Relay Bank. As the digital banking landscape continues to evolve, Relay Bank is likely to explore new ways to make money. For example, it may offer more personalized financial products and services, or it may expand into new markets. The bank's ability to innovate and adapt will be crucial to its long-term success. Conclusion. So, how does Relay Bank make money? While it may not have the same revenue streams as a traditional bank, it leverages its digital-first approach to generate income through interest income, fees and charges, investment income, and partnerships. As the banking industry continues to evolve, Relay Bank's innovative business model positions it well to compete and thrive. With that said, thanks for watching, and until next time.